Good morning, everybody, and welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So to start out, we have a market that is slightly higher this morning. This is after Taiwan Semiconductor reported very strong numbers, although the stock is only up about 3% on the back of this incredible report. And again, part of that is the stock has gained about 85% going into these numbers from the April 7th lows. And so we always talk about this in the game plan of how when a stock rallies precipitously, like a massive move up going into earnings, it's building in that it's going to beat expectations. And so even when they do, there's limited upside to that. And we'll look at the chart and find the levels to trade on that as well. Now, today we did get jobless claims out, and jobless claims coming in at a muted 221,000. Again, folks, if you remember about a month ago, we were upticking on jobless claims to about the 240 to 250,000 range. Now, remember, for all you newbies out there, jobless claims are people filing for unemployment. So the higher the number, the worse it is for the economy. So the fact that we've come back down to 221,000 means that basically the economy is doing just fine. In addition, retail sales, look at this number, guys, plus 0.6 versus a expectation of only plus 0.1. Now, what does this tell us? This tells us that the economy is actually, in my opinion, picking up a little bit of steam. Now, I know that kind of comes as a crazy shock to many of us, but actually the numbers are starting to show this. Retail consumer spending, the consumer is starting to spend more. Jobless claims are coming back into that 220,000 level, which is really, in a growing economy, that's about the normal level. And really, if you look at this and you say, well, why? Why is this happening? Why is the economy, even with tariffs, starting to pick up steam? There's a couple reasons. So the first one would be that the tariffs have been kind of kicked down the road, right? So multiple times the Liberation Day announcements were kind of pushed to the side, and the date for when major tariffs were going to go in went to July 9th. Now it's to August 1st. So people are beginning to say, hey, maybe we're not going to get these massive tariffs that everyone thinks on these other countries, right? In addition, the inflation numbers have stayed relatively muted. So people were expecting these big pops in inflation. It made them pull back on spending. We're not seeing that. And then lastly, the stock market. What does the stock market have to do with it? It's called the wealth effect. When people look at their 401ks, their IRAs, their retirement accounts, their investment accounts, and they say, wow, look at this gain from April, up 25% or 30 or 40%. Heck, we just talked about Taiwan Semi up 85%. Now they're feeling better about themselves. They're feeling better about their financial condition, and they're more apt to go and spend. That's consumer spending, and that is the driving force behind the economy. Now, before we get into that, folks, what I want to do real quick here is get into the Fed Watch tool, because really this is what's interesting. So many people out there, and by the way, I'm going to our homepage because we have all this data for you on the homepage of Verified Investing. And all you have to do is scroll down to the bottom. And by the way, don't forget, there's lots of amazing charts out there here for you guys on a weekly basis to go over. Here's our earnings calendar. So if you want to know when earnings are, economic data, obviously right here. We have lots of good articles, economic metrics, and even shorts out there. But if you go down to the bottom, you have the fear and greed on each side, and then we have the Fed Watch tool in the middle. And the Fed Watch tool is helpful because it tells us what the expectations are. And again, suffice it to say, guys, is that I know the president is pushing for the Fed to cut rates. In fact, the market yesterday saw a steep midday sell-off when it was rumored that Jerome Powell was actually going to be fired. It was imminent that he was going to be fired. And then the president walked that back, right? He said, no, that's not going to happen. And the markets came back. But I will say this, the economic data the way it is does not signal the Fed should be cutting rates. Absolutely not. really the Fed needs to keep that in their pocket for when we see a major slowdown. And if you drop rates too early on and the economy is not shrinking, in fact, it's growing, you then can create more inflation on top of whatever inflation comes from tariffs. So if we take a look at the Fed watch tool here, we can see that the Fed is still expected to cut rates in September, right? Right here, 52.6% chance they cut rates. But look, this number of no cut is creeping up for September. Now, listen, we have a meeting at the end of July. There's like only a tiny, minuscule chance of a rate cut, right? 97.4% that we're going to stay at the current rate for the Fed funds at 4.25 to 4.5%. But here we're still expecting, based on the Fed watch tool, the markets are expecting a cut, but it's not that different. It's almost a 50-50 of whether or not they're going to be cutting rates in September. In October, then, if they don't, then it's expected they would cut. You can see 22% that they don't, and 27.6% that they do a double cut. So really, it's still looking like we'll get one cut between September and October. But the question is it going to be October versus September? And then if you look here, still looks like we'll see a cut in December, nothing in January. And then once we get into March, we're expected another cut. But again, this is what I follow to kind of gauge it. And I happen to agree with this. I mean, in all fairness, I actually don't think we should be looking for rate cuts, or at least that the Fed should be cutting rates in September, even based on the current economic data that we've just discussed. All right. So let's get back to a couple of the chart stuff. So you guys know I love charts, and that's what I do here at Verified Investing. If we take a look here at the ES futures, look at this, guys. So this is telling us that the markets really like the economic data today. Now, this isn't a huge move up, but look at the consistency of each 10-minute candle on the S&P futures. It's a good, solid grind higher to new highs from yesterday. So here was yesterday. Here's where we heard that Jerome Powell, the Fed chair, might be fired. The markets took a big dip. Then again, the president said, nope, that's not going to happen. And the markets rallied back up. We then see here in the overnight futures, we're down a little bit. We came up and we've chopped around. And then right here is where we got retail sales at 8:30 a.m. Eastern time and jobless claims, and the markets have gone higher. So again, that tells us that the markets like the strong economic data. And essentially what the markets are telling us is that there was a fair amount of fear, and there is a fair amount of fear, that the tariffs would have an impact to slow the economy. And obviously we're not seeing that. The question is, do we still see inflation bubble up in the coming months? So that's something to keep an eye on. Now, let's go to our normal chart on the S&P. Here we have our S&P chart, guys. So remember, if you watched yesterday's game plan, we went into this quite in depth. We talked about these three trend lines, the three horsemen here, which again are epic resistance on the S&P. We hit it right here and it stalled the S&P out. I mean, it literally took the bull move here and just made it go sideways, unable to gain much traction. Then I put this trend line in for you yesterday, right? From the low in April, no chart, no candle intersects it until here. We extend this out, and we can see that we closed below this line on Tuesday, right? And what did I say in yesterday's game plan? I said, listen, guys, I've seen way too many times where you close below a level, people say, oh, here's a breakdown, and then it reverses back up. And essentially, that's why I created the confirmation signal, to tell me when odds strongly favor a breakdown versus when it closes below a level, just like when it closes above a level, there's only a 50-50 chance it holds. And yesterday, we only had a 50-50 chance that this close below was going to hold, and it was a real breakdown. Sure enough, what happened yesterday, we dipped early. It looked like it was going to confirm. It looked like it was going to be a real breakdown, and then price reversed, and we did not confirm. Lo and behold, today we are up again on the day. Not a lot, but again, we are trading up on the S&P. So listen, you're still, as of now, going to open just below the green line. So that's still in the zone where it could technically confirm, but we have not confirmed as of yesterday. And as of today, we're going to open higher, and you can see the markets trying to fight up. Now, one thing will be interesting is as we get into these levels here, we have this green line that's going to intersect the yellow line and eventually intersect these lines. And it's going to add extra resistance up in this range. So we haven't confirmed. We can see the S&P futures are up right now, but we need to still be vigilant and monitor whether or not at some point we confirm in the future. All right. So again, confirmation. Let's go over it one more time. When you confirm a breakdown or a breakout, the odds of that actually being legit, meaning that it continues in that direction, about 75% to 80%. That's a pretty strong number. If you don't confirm and you just close above a level or just below a major level, 50-50. That's it. It is what it is. I'm an odds trader, right? I mean, I'm a probability trader, and I always try to give you guys these things in terms of probabilities so that we can all understand when something doesn't work out. We're like, oh, yeah, well, the odds, right? The probabilities give us a guide to what is good as a trade potentially, or a breakout or breakdown versus what could be a fake out by big money investors and traders. All right. The dollar today is inching back up. So we continued. Look at how yesterday on the dollar we came back, piercing this line. By the end of the day, we closed above. Same thing. We still haven't confirmed a breakout above this line on the dollar, but today could be the day. To confirm, all you need is a close above the breakout candle high. So again, we're not there right now. We wouldn't confirm if we stay here, but if we go up a little bit on the dollar, yes, it would confirm. Then we look at the 10-year yield. The 10-year yield creeping down a little bit. It's had a pretty significant run up, so it's kind of due for a little bit of digestion here. I still think there could be one more move, especially with the economic data being stronger. It would not shock me to see the 10-year pushing up into the 4.55 level here. Again, that's a 10-year yield. 4.55% is that upside where it should meet resistance. Taiwan Semi. Take a look, guys. Taiwan Semi reported great numbers overnight. Remember that yesterday we had ASML. ASML is a European chip company, and they did not do well on earnings. The stock was down, I think, about 8% yesterday. Now, in the game plan yesterday, I said to you guys, listen, ASML has had a lot of trouble in the past, even while the rest of the semis have done very well. So you can't extrapolate out that ASML earnings are going to tell us that all of the semiconductor AI plays are going to be struggling. And sure enough, I said, watch Taiwan Semi. If Taiwan Semi has problems with their earnings, now it's a bigger issue for the entire sector. Sure enough, Taiwan Semi did not have any issues. They beat on the top and bottom line. Their growth is incredible due to AI demand. And sure enough, we are seeing Taiwan Semi trading up on the day. Now, in all fairness, it's not a huge move up. And you might say, wow, they blew away with growth numbers and they beat on the top and bottom line. You know, why is this only up basically 3% or under? And the answer can be found by going to the daily chart. The daily chart, like I said here, guys, look at the run on the daily chart here. From the low on April 7th of 134, it's now trading at 245. That's basically an 83% gain on the stock, almost straight up. I mean, yeah, you've had a couple down days along the day, but along the way, but no major kind of consolidation or pullbacks. This is a stock that, again, was pricing in perfection. They basically did it, but even on that, it's only getting a small bid. Now, in terms of trading, there is a zone right up here. So check this out, guys. We have an upsloping trend line connecting through the August correction low to the secondary low here. And then the recent highs, prior all-time highs, essentially, from October of 2024 through the high of January 2025. Those two lines are getting closer and closer right up here. And to me, that tells me there's going to be good resistance around 244 to 251. It's a $7 range on a $250 stock. That's very minimal, right? But essentially, that tells me that based on where it's currently trading at 245.50, this is now within that zone where, sure, it could go to 250, 251, but you're now within that zone where we should expect a potential retracement. All right, now listen, nothing against Taiwan Semi. They had great earnings. But having said that, the stock has just run a long way. Don't be surprised if it pulls back today and even goes flat or negative on the day based on the fact that it could see some profit taking just because of the massive run and the gap up today. All right. Couple more charts to go over, then we'll get into some crypto and some gold and silver. Micron today is lower on the day, trading down. So again, even though Taiwan Semi is up, the semis overall are kind of mixed. Nvidia is up, Micron is down about 2 to 3%. Micron's going to get interesting here. I have a trend line I'm watching. Look at this trend line here. If we kind of drag this down here, it looks to me like, listen, it's still a ways away, but this would be a swing trade level right here. Notice all of these highs down sloping. Now, listen, we're still $13 away on the gap down. But for me, if this gets back to $100, you also have this flat area right here, these two lines kind of converging. This would be very, very interesting to me as a swing trade long. All right, so keep an eye on Micron. In terms of a day trading level, let me just quickly look at this here. Looks like there's a small gap fill pivot around 111. So we might day trade that in the Apex Live day trading room. Of course, you all are welcome. We even have 1-day passes. If you're just off from work for one day and you want to pop in there, you're more than welcome. The knowledge that we share alone is worth its weight in gold, let alone any trades that we take. And we've been on a great streak, knock on wood, with, again, just consistent winning days. It's been amazing in there. NVIDIA, guys, we're into this big level here. So this is something I'm watching on NVIDIA, the 172.50, 172 level. Notice, again, multiple trend lines, extended move on all these semiconductor charts. And again, they're all coming and converging right around this level. So big level on NVIDIA. GE reported earnings this morning. This stock, again, is up slightly on the day. They did raise guidance, but at the same time, if you look at this chart, it's basically vertical. At least it had a couple pullbacks. Also, this key trend line here, this would be another one where it may be slightly positive today, but even though it beat by a mile and did really well on guidance, this would be something where I would say to you guys, don't necessarily expect this to keep going just because it's kind of running out of steam. Like, again, think of a stock like a car, right? You put gas in the car, it can go 300 miles, 400 miles, or on electric EV, the charge, whatever the charge is. The point is, at some point, it needs to refuel. Refueling in trading or in a stock is where it kind of consolidates or pulls back. Right? It has to kind of rejuvenate itself. A great analogy that I love to use is a marathon runner, right? So a marathon runner, they train for it. They run their marathon. You can't tell the marathon runner, okay, you just literally finished your marathon. Now go run another one. They're going to be like, dude, I need to relax. I need to rejuvenate. I need to eat something. I need to drink. I need to hydrate. Same thing with stocks. And so you look at these things, and when they go too far away in a straight line, eventually you get profit takers, and even good news cannot keep them up all of the time. They eventually need to have that digestion period. All right, last couple charts here. Let's jump into crypto real quick. Bitcoin, again, we saw it break above this longer term weekly trend line that goes back to 2017. On the daily chart, we did put in a topping tail. That is the dominant force for now until proven otherwise. Notice the next day we retraced into this line. We then bounced and we're consolidating. From what I'm hearing, the U.S. government is still wrangling on passing this legislation for crypto. Needless to say, that's probably why it's stalling. But I will say this. A lot of people would say, oh, that's why it's not going higher. I instead say, well, the chart is paramount. I don't know anything. I don't know whether this is going to pass. I don't know what the repercussions are. I don't know if this already baked it in based on where it has gone. So for me, the topping tail is there. And I look at that as the key foundation of what my analysis is until it's negated. If it's not negated, then that's the dominant signal, right? Because, I mean, think about how many times we think, oh, this stock had great earnings, it should go higher. Or, oh, this came out, it should. I mean, think about how really what we saw is we saw going into the president's inauguration, we were at the highs. Now, everyone was like, oh, well, as soon as he gets in office, crypto is going to really rip higher. Instead, we actually saw a correction. It was a sell the news event until the next leg up on Bitcoin. And so I always say to myself, and I say this to all the traders that I train and the investors, is that we all have our preconceived thoughts of what should happen, but the market has a way of proving us with those preconceived notions incorrect. But the one thing that gives us the best probability of success, what is it? The charts. The charts give us probabilities. The charts don't lie. The charts don't have biases. They are what they are. And until proven otherwise, that's what I follow. Okay. All right. Ethereum has been a great mover here. Look at this continuing to move up. It did hit my next level that I gave you guys yesterday in the game plan. I said it was probably going up to this 3,450 level. Sure enough, boom, right there. And it stalled out. Again, doesn't mean it can't break here, but I just have to respect resistance until it breaks through. If it breaks through, then you probably go up to this next level. I'll even give it to you guys now, around 3,700. This pivot high will be next. And then if it gets through there, you're looking at 4,100. Gold today, let's take a look. Gold is back below this trend line. Remember, I did tell you I shorted gold just a day or two ago, right over here. So I'm still anticipating a near-term downtick in gold, maybe as low as around 3,060, 3,070, this lower band of the parallel. But again, it doesn't mean that I'm bearish on gold mid to long term. This is just more of a swing trader, quick trade to the downside while I still hold my longer term positions, thinking gold's still going to 4,000, 5,000, etc. All right. So again, just keep that in mind. Next up, we have silver. Little reversal here. This is even a short-term topping tail on silver. So far, again, that was a level that I gave you in the game plan as a target on silver. It went right there. That was a great move. And then sure enough, it reversed. Support remains at $37. Resistance remains at 39 or just above 39. Oil, it was trying to break its parallel yesterday. It was below briefly. It recaptured it by the end of the day. This is a bear flag, classic bear flag. We're hovering just above that line. If you get a close below, look for confirmation. If it confirms, game over. You should go at least to 60. I would say right here would be first support, 63.75, with potential downside to about 54 to 53. And then lastly, Nat Gas. There hasn't really been a trade for me recently on Nat Gas as it's grinding higher, but resistance is coming up. It's getting closer and closer, around 373 to 375 on natural gas should be significant resistance. All right, guys, lots to discuss. By the way, I love earnings season because we finally get more and more stocks that are making big moves pre-market to look at, to give levels on. Then you throw in the economic data. Then you throw in the craziness that's going on with the trade wars and potential firing of Powell. It just creates a lot of interesting action where we can analyze the charts. And even if you guys just watch these for fun, I hope that you're absorbing some of the lessons that I give, some of the things that I've learned the hard way over 26 years of trading. And again, my goal here in the game plan is to use just charts. So we use probabilities to decipher what is most likely to happen versus unlikely. And then really, my experiences where I lost a ton of money as an early investor and trader for literally years and years, just trying to figure this stuff out. I hope that you guys are able to avoid at least some of that by learning from me. And that's what we're here for at Verified Investing. No BS, just charts. And of course, my past experiences become your benefits. That's my hope. All right, you guys go have a wonderful day. Thank you so much for tuning in. All your support. Spread the word of Verified Investing if you wouldn't mind. Follow me on YouTube. Follow Verified Investing on YouTube. I appreciate you all. Thank you so much. Take care.